Alright, so today I wanted to review a trade I took today. So here I am in the daily time frame. So what I noticed was we have a big expansion, big displacement away from this order block, which is this high, this low, all consecutive downward candles, which is order block. Sell side of the curve, we touched in it, we moved away from it. So for today I was expecting a consolidation or some kind of slow price action because this was such a big range candle and usually what follows is a slow day. So then what I am then going to do is go to the lower time frames and see what's happening over there. So I also marked out the bearish weekly fair value gap, which is this one over here. The clear fair value gap over there, and here's the 4-hour. And what I notice here is that there is a big fair value gap overlaying with the 50% level from this high to this low. This is the very dealing range that we are currently in, obviously on the buy side of the curve. So when we have a very big fair value gap like this, what I'd like to do is I'd like to create this one. So this dashed like so. And notice only 25% level is in close proximity to the consequent encroachment of this fair value gap of the weekly. That's just my mark. And the sold prices, of course, for consolidation. I don't really need to see in the 15-minute how the price is doing. Only 15 minutes. I want to see where we are in price. We're using the most current dealing range. The most current dealing range for me is starting at this low right here, all the way up to this high, and making the left and the short. The reason I pick is low was because there's a consolidation, manipulation, expansion. So there's not really all the lows that took lots of liquidity. So it is low right there. So therefore I'm using this low in the 15-minute. And you can also see that Asia High is here respecting it. The boys over here, and so only later today. But for this morning, I only saw Asia was respecting nicely. Here you can see some bodies resting to the line. And for very capsule overlay on over here. So I kept this on my chart to see where we are. So we are in just below 25% level and the 50. So you could grade that as well again. And remember the blue lines is the fair value gap, and in close proximity to the 25% level, there's this weekly fair value gap. So London made a move lower, creating a dealing range on its own. So you see what London did. Like this for payments. You can see just the midpoint versus the value gap versus the midpoint, which got respected. So it's actually you can see there's the average value gap and the body is far. And below the midpoint of this value gap, then price traded lower. And here it becomes interesting because the 25% level is also there's a value capability. You're very close to the 50% level of this entire dealing range, right? And what I noticed was price was failing to touch this 50% level. And we go to 1 minute. Here, I was watching this price action, and what I noticed was okay, probably price going to take higher, we consolidate here, and we will now probably take out this low and go deeper. But instead, what happened was price created new dealing range. We are closing strongly above this swing line here and creating a bunch of nickel highs here. So what I did was I found it very interesting. So I waited. Then I saw this piece of price action right here, this consolidation here. So we can mark it out. this. Then I saw price coming down, respecting the 25% level of the 4-hour value gap, tapping into this imbalance and close back inside of the consolidation. Then the consolidation goes on and goes on, and then I saw this placement, and this was my entry candle. Well, I went long in here, something around here, put my stop at the safe location, below the low as well, and a few pips for spread. And since this price action was very slow, and we filled out this low, we did not touch a 50%. We are respecting the 25 now. And we were also respecting this for value gap. Those were for me signs, bullish signs to take a trade. I'm also considering a bullish reversal. So I went to the 5-minute. And looked for a logical place to take my profits. And I noticed there was an equal highs was over here. But also what I did was I created this high for this low to see where 50% was. And here's 50% is over here. What do we have here? Internal liquidity, here there's some equal highs. There's here equal highs. And now it's this value gap. So this portion of this value gap right here, another portion was already an efficiency derivative. So this was left of this part right there. And there were also some relatively equal lows. Equal highs, I'm sorry, the bodies. Look at the body. This body is lower than this body. So if I'm not mistaken, I took a trade. It's right there. I think this was kind of my trade. And the reason was, I think, if price is going to take this high, and it probably might as well go to at least the rejection of the very safe TP. So as you can see, price went in my direction. What I did, took some partials because I wasn't that sure. Because here are a bunch of equal highs at the start of the bearish value of the floor down, and here on the 1 minute show the bearish value that the price reacted to it. As you can see, by a small retracement. So somewhere in here, in this area, I took a partial, put my stop into profits, and let's say break even. Very minor, let's say this left one, put my break even, and then as you can see, price near following, and in the beginning of New York, my TP was it. So that was my trade that I actually took. Of course, afterwards, I followed price, see what it did. So let's do a 5-minute. So then price took out these relative equal highs, resting at the 25% level, as you can see here. When we hold taken, and ultimately took out this high. And also, if I go to the daily, got to mention this inversion of value. So in here, I took out this high. That for the second time, a little bit below the daily. That for the second time into the daily. That inversion for value gap, and then the displacement of a big time. So this creates what there's the dealing rate, right? This high to this low, leaving the breaker. So I saw this all happening, and then again this, again back into the 4 hours of value gap, and then I took a baby trade right there. Put my stop that being there. And since we already traded into with the value gap right there, I know that 50%, 25% I was definitely thinking we probably go in for 5%. Let me see. I can't see it from here. Oh, I'm sorry, I took it from this value gap right there. I took it here and took to the 50. Just above the 50. Yeah, that was it. That was this trade. I took it based on the 15 minute. I'm sorry. I saw this value gap forming on the 15-minute, and then I took an IFED stop spread above this high, and my PP around 50%. That's what I usually do. If I see a value gap is stepped in once, trades away from it, and I see a possibility that it might trade back into the same value gap, then I go do just like profit at the concept on the growth zone, because that's usually what it does. So that's my baby trade. I think that would be the maybe a better trade, I don't know. Today I wasn't too sure about the direction of the daily candle, and as you can see now, only just a few moments ago, price is really digging lower, and the rest of the day was just going sideways, as I was expecting, because yesterday was a big range day. Yeah, so anyways, this was it, and till I speak to you next time. Bye.